Welcome back to John Author's Note. The European Central Bank met yesterday. Markets were wondering if it would have more measures to stimulate the Eurozone economy. It didn't, but nevertheless the euro still went up. Here to discuss what's going on in currency markets is Jane Foley from Rabobank. Welcome, Jane.
Thank you.
If we look at our first chart, you can see the euro is recovering quite strongly at the moment. What's going on?
Well, there's a counterintuitive principle that's going on, and of course the ECB, if you like, is stimulating the markets, or at least it's threatening to through its OMT plan, but more than that, the market has been reassured that this plan will help to bind together EU.
The OMT is the plan to save the Eurozone, if you like, the government bond intervention. It's ironic, isn't it? Because what's going on in the US, of course, is that the Fed is easing to stimulate the economy. Why is this not having the same impact here in the ECB's actions? Why is it not having the same impact in the Eurozone?
Well, if you like, the ECB is also influencing the direction of the dollar. The Fed, by doing more quantitative easing, is increasing the supply of dollars, but the ECB, by increasing enthusiasm for the Eurozone project, if you like, is decreasing the demand for dollars as a safe haven. So the ECB's move in September, as well as the dollars, or the Fed's move in September, both had the impact of weakening the US dollar.
So it's very different dynamics across the Atlantic.
Precisely.
Let's have a look at the euro and the dollar in a historical perspective. We have them here on a trade-weighted basis, and what strikes me is that actually the dollar is really remarkably weak at the moment, isn't it?
It really is, and I think throughout the whole of the Eurozone crisis, many people have anticipated that the euro against the dollar will be a weak, very weak currency, but again and again people have proved wrong. And of course what we're looking at is not necessarily euro resilience, but a weakened dollar, and I think this chart displays that. And of course Q3 this year, the dollar was the weakest performing G10 currency. The first 8.5 months of last year, the dollar, the weakest performing G10 currency.
Let's look at the euro though, because if we look at it compared to when it started in 1999, it's not changed much, has it?
No, exactly right.
Do you think it's got a long way to fall then?
No, not necessarily. I mean, the euro has dropped throughout the crisis. It is a weaker currency than when the crisis began. That's for true. That's a true point. But right now, it's quite interesting. The market became very, very short of the euro during the height of the crisis. And now the market is relaxing some of those positions, moving back into the euro. So quite possibly, whilst the euro will be a weakened currency against many other currencies, against the US dollar, it won't necessarily be, because of course we have dollar weakness.
Let's have a look at that dollar weakness and the impact it's having globally, because as you can see in this chart which you've provided for us, the impact on some of the other currencies is really quite stark. Tell me what's going on here.
Well, here we have dollar weakness. This is the dollar being the weakest performing currency in the third quarter of this year. And these are all the other G10 currencies, all of whom have gained against the US dollar. Now, there has been an interesting theme, because whilst many euro-based investors may not want to hold very long euro positions, as they may have done historically, they don't want to hold dollars either. And this has been forcing diversification. And as you see in the third quarter of last year, the Swedish krona, Norwegian krona, New Zealand dollar, Canadian dollar, and even sterling all been seen as potential alternatives to the euro or the dollar.
If you look at this, actually the British pound's doing quite well.
Well, it is. In fact, the British pound is up around about 4% against both the euro and the dollar since the start of this year. So,
even though the Bank of England's easing as well.
Even though the Bank of England is easing well, and I think the pound has been a reactionary consequence of either the problems in the Eurozone or Q3 in the US, which is forcing people out of dollars.
Well, let's try and look forward a bit. We're looking at these really quite significant changes just in one quarter. There's a political context to this, but what does it mean? What's going to happen in currency markets going forward? Are we going to see more of these diversions going on? Is the dollar weakness the big theme at the moment?
I think dollar weakness is a big theme. I mean, it will be pitted, if you like, by periods of euro weakness when we have other bouts of stress in the Eurozone crisis. However, but I think dollar weakness going into the fiscal cliff, going into next year, will be a theme because of the Fed's policy. And this, of course, does strike up the theme of currency wars, with many emerging market central banks really being quite opposed to the inflow into their currencies as a consequence of Fed policy.
Thank you. So, with the US elections looming and the question of the US fiscal cliff coming, it's obvious that these euro, dollar and other currency tensions are going to go on for quite some time before this story is fully played out.